now let us see how to prepare a comparative income statement. Before beginning, let us see what is a comparative income statement. Comparative income statement is a comparison made between income statements of a same company or a same business in two different years, or we can make comparison of two different companies also. Whatever it may be, we are just comparing income statements. Now we should know what is an income statement. Income statement is nothing but a statement, a proper written format which shows how a company or a business have made income. Please remember, we are not talking about just sales. Okay, sales is just the revenue of the business. Okay, from our revenue, when we deduct all possible expenses and losses, we can find our income. Please understand that concept. So what is an income statement? We can simply say that it is where a business find how they raise their net income from their net sales. It's a journey from net sales to net income. By selling something, we got a lot of amount, but that's not our income. Okay, it's something that we collected. From that, we have paid so many expenses. After deducting all such expenses, what we will get? We will get our net income. Now, here is the format of a comparative income statement. If you just ignore this part, see, here we are making comparison. Instead of making these four columns, if we are just given an amount column, what is this? This would become an income statement, not a comparative income statement. I hope you got that concept clear. Okay, now let's see how to prepare a comparative income statement. See, we are drawing an income statement with four columns. What are they? We have a particular here. After that, we write year one. Year one means the oldest year. We will be given the data of 2 years. From that, which is the oldest year, the amount related to that year will be written here. Now year 2 means the latest year. From the data given, which year is the latest year, that year will be mentioned here. Now the third column, we will mention the change. What happened to each value mentioned here and here when we compare year 1 and year 2. That change would be mentioned here. Don't worry, we will see how to do a practical question. We will understand more there. Okay. After writing the change, we will check what is the change in percentage. Change in percentage means what? See, here year 1 we had one value, year 2 we had another value, so we said that we have a change here. Okay, now what percentage of increase or decrease when we compare it from the year 1, what percentage of increase or decrease had happened in the second year? We will find it out in the last column, change in percentage. Hope you have get good confused with that. Don't worry, we can see that with the example of a practical question. Before moving on to the question, please have a good look at this comparative statement pro forma, because this is one of the simplest form of what a comparative statement. I have made a comparative income statement simple for the students who are learning these things for the very first time. So understand, not only this, you can expect, if the question is becoming complicated, you can expect more things. But here I have just given the very simple, the easiest part, just the basic thing you have to know. See how it began. Just look at that journey, how that it goes. It begins with net sales. Okay, the income statement begins with net sales. From net sales, we will deduct the cost of goods sold. Remember, cost of goods sold is the cost of the product or service we have sold. Okay, so just see how we fix selling price. Think the selling price of a pen is 10 rupees. 8 rupees would be the cost of making it. 2 rupees would be the profit of the company. And that is how we prepare the selling price, 10 rupees. So now we know what is the sales we have done. We have to find what? The profit. We have paid the cost, so we know the cost also. So that is what done here. What we deduct from sales, we deduct cost, and we get what? The gross profit or the gross income. Hope that's clear. So first what we did, we just wrote down, we just calculated what is the total sales we made in year 1 and year 2. From that, what we are deducting? We are deducting the cost of goods sold. Remember, we are just deducting the cost of the sales. Okay, that means the production cost of the material or production cost of the service we have sold. Think we are running a hotel. We have to buy the raw material. We have to buy the vegetables, rice, everything. No? So we have made a sales of 10 lakh rupees. The amount we spend to buy that raw material, vegetables, and all those things are just deducted here. That is the cost of goods sold. Let it be 5 lakh rupees. Then what is our gross profit? 10 lakh minus 5 lakh rupees. I think that is clear to you. From there, from after calculating that, okay, after calculating that, we will go to the next part where we deduct selling expense, administrative expense, and general expense. This part is called SAG. Okay. This is how American people remember this part. It is called SAG, and this part is called COGS, cost of goods sold. Okay, first from net sale we deduct COGS. That amount we mark as gross profit we have earned this year and this year. From that amount we deduct what all things: selling expense, administrative expense, and other general expense. Okay. By deducting, we come to another profit. Okay, here we got gross profit. Here we get operating profit or operating income. This is called EBIT. Remember, it is called EBIT because EBIT stands for earnings before interest and tax. That means after doing all these deduction, we have just two major things to be deducted from here. That is interest and tax. So the interest we pay and the income tax we have to pay will be deducted after this. So this profit is called operating income or EBIT. Hope that is clear to you. From operating income we will deduct, just see one important thing is here. We will deduct interest and tax. Before that, see here, some sort of indirect expense and indirect income would be there very rarely. Remember, very rarely there would be some indirect expense and indirect income. What is indirect expense and indirect income? We have paid something to a charity company, or we have made something for additional, not just for the main purpose of the business, something in additional. Just think we have placed a public utility tap, and we have some cost incurred for that. We do that for what? We need for others to get know about our company. Something like that, something indirect thing, not directly related to the business. When we incur expense on in such indirect thing, we call it as indirect expense. And indirect income are all other income of a company other than sales. I will give you an example. Think our company had 10 lakh rupees with us. We didn't had any use of that. We can't do anything with that. That means we have no plan of doing anything. So what we did, the company invested that 10 lakh rupees in another company, and from there we are getting what? Interest as income. Remember, we get interest as income from that company, or we get dividend of the profit from that company we made investment. Like we make in stock market, we invested in some company with the surplus amount we had, and we got monthly interest or yearly dividend. Okay, then that is an indirect income, because investing in other company is not the main purpose of our business. We are doing something, we got sales, we got some income from that, we had some surplus amount. With that surplus amount we made another income, not the main income. Such incomes are called indirect income. So if anything indirect is given there, indirect expense or indirect income is given, we can adjust it here after deducting interest. Okay, after that we will get a profit. This profit is called accounting profit before tax, because there is only income tax left to be deducted from here. Remember, income tax is deducted based on this income. Whatever may be the amount given here, we will deduct income tax from this amount. Most of you may not have seen how the income tax is deducted. Leave it. We will see the question and we will get a better idea there. Okay. Now we can move on to the question. Here is a question for you. Convert the following income statements. See, income statement. That means they have given income statement of 2050 and 2060 together. Okay. Of ABC Hotel into a comparative income statement. They have given the income statement. We have to make it into a comparative income statement. First, see what all items they have given. we need to draw a format only accordingly. If you are drawing this one, see something I have given before, you can do that also. You can by heart this format and use wherever you have asked to draw a comparative income statement. That is a good practice. But if you find it difficult, you can also do what? Just draw what are the most important things alone. Just see here. Okay, now we can see the question. It is given particulars. Net sale of 2 years. The ABC hotel. This hotel made a net sale of 1,55,000 in 2015, 1,80,000 in 2016. And see the cost of sales. For selling something for 1,50,000 rupees in 2050, ABC hotel have spent 70,000 in purchasing material and something closely related to the product sold. Similarly, in 2060, they sold for 1,80,000 rupees. For that, they have bought things worth 80,000 rupees. Remember, it is not the total expenses, just for the things they have bought to prepare and sell. Hope that is clear to you. After that, they have given administration expenses. What is administration expenses? Related to the office, related to the management of the business. They have spent 25,000 in 2050. In 2060, they have spent 20,000 rupees. Now see the selling expenses. Selling expenses 10,000 rupees in 2050 and 15,000 rupees in 2060. See the interest they have paid, that is given, and see the income tax. Income tax is given as percentage and not a particular amount. Remember, income tax is always paid as a percentage. Percentage of what? Percentage of income we get here. See, percentage of the income we get here after deducting all other expenses. Based on this amount, we will calculate. For example, if it is 10,000 rupees, what we will do? We will take the 40% here. Then 4,000 would be the income tax we have to pay. Similarly, we have to deduct all these expenses from the net sales. Okay, then we will get an amount. 40% of that amount will be taken as income tax of 2015. Similarly, if you take the 50% of such an amount in 2060, we will get what? The income tax we pay in 2060. It's another expense alone. Don't get worried. We can see what we have to do. We are going step by step. When you answer, you need to draw just one table. Please remember, just one table is enough. I have given here 4 steps and 4 tables just for you people to understand. Please remember, when you are answering a question in exam, just draw one table. Okay. Now, what is the first step? You have received a question like this, and it is given for a particular university, whatever it may be. It is given as 10 marks. Okay. Now, you understand the question. You have to draw a comparative income statement. What is the very first thing you have to do? First of all, you have to draw the format. This is the format. See, here we have just considered items that is mentioned in the question. If you remember the pro forma, here we used to do SAG. I had told you, selling expense, administrative expense and general expense. But while answering this question, we have skipped the general expense part. Why? Our question doesn't mention any general expense. If you are drawing a column for general expense, please what will you do? You can just put an hyphen here. Think there is no selling expense for this question. You have written selling expense, just put an hyphen there, then you need to consider that column. So that is clear for you. To avoid that, what I have done, I haven't drawn the things that's not mentioned in the question, so I have skipped the general expense part here. So first you have to draw the format. Please understand the format. What is happening here? From net sale, when we deduct the cost of goods sold, we get what? Gross profit. From gross profit, we have to deduct selling expense, administrative expense, and if there general expense also, we will get operating income. And from the operating income, when we deduct interest and tax, see here we have not mentioned anything about indirect income and indirect expense. Why? Simply because the question doesn't speak anything about indirect expense and indirect income. So we need to mention that directly from the operating income, we are deducting interest, we get accounting income before tax. That means before considering tax. From this amount, remember, of this amount we will calculate the tax to be paid. And after deducting that amount from here, we get the net income, that is the income after considering all possible expenses and loss. Hope the format is clear for you. Okay, the very first thing is you have to draw the format. After that, you have to find the net income. Just see how the net income is found here. First of all, we wrote the net sale of 2 years. See, what was net sale in the question? If you remember, the net sale was 1,50,000 for 2050, 1,80,000 for 2016. Now we are going to write it here. Okay, see, we have written the net sales. From net sales, we are deducting the cost of goods sold. From now, I am not showing the question, but I have written the same amounts here. See here, the cost of goods sold is 70,000 for the year 2050, 80,000 for the year 2060. So we have to first find out the gross profit. See, gross profit is the first result we have to find out. How can we find the gross profit? See here, from the 1,50,000 we are deducting the 70,000. Just see, 1,50,000 minus 80,000. You can use a calculator to do the same. See, 1,50,000 minus 80,000, you will get the answer 70,000. Now see, what's the second thing? 1,80,000 minus 80,000. Oh, we don't need a calculator to find it. It is 1 lakh rupees. So that is the gross profit. I am explaining you what is gross profit. Please remember, it is the most direct profit we can calculate from what? Sales. See, we have bought something for 80,000 and sold it for 1,80,000. So the most direct profit or the income we got from sales is 1 lakh rupees. Hope everything is clear to you. Now, from sales we made a profit. We are just calculating what profit we made from the sales directly. Directly we have made 80,000 rupees profit in the year 2050, 1 lakh rupees profit in the year 2016. Now we are going to deduct selling expense and administrative expense. Selling expense 10,000, 25,000. Just deduct from 80,000. Okay, take your calculator. 80,000 minus 10,000. You will get an amount from that minus 25,000. You will get the answer 45,000. Similarly, when you do in 2060, you will get the answer 65,000. Now you have got what? The operating income. Operating income means the income earned before EBIT. Please remember, earned before interest and tax. From the question, we are going back to the question. What all things we have considered? We have taken the net sale, deducted the cost of sales from it to find what? Gross profit. From that we deducted the administrative expense and selling expense. Okay, now we just have these two things to be considered. So we call the profit we have earned till now as the EBIT, earnings before interest and tax. Hope it is clear to you. We can now move back to the question. We have done up to this. Okay. Now from this EBIT, we are going to deduct the interest. By deducting the interest, we get 42,000 and 63,000 as operating income after interest, or it can be taken as operating income before tax. After interest means after considering interest as an expense. Before tax means before considering tax as an expense. Simple. Whatever you write, it is up to you. See, I have just given an example. If you are directly copying the formatted here, what you can do? See, indirect expense is not given in the question, but you have directly copied the format you have learned. So what you can do here, you have to do nothing, just give an hyphen like this and copy the same amount here. We are not doing any calculation, right? We are copying the same amount here. So now we have arrived at the accounting income before tax. That means we just have income tax to be deducted from this amount to calculate our net income. Okay, now let's see how to find the income tax. We are going back to the question. It is written for the year 2050 the income tax was 40% and in 2060 the income tax was 50%. Now remember that amount. We can go back to that question. We have our accounting income before considering tax for the year 2015 as 42,000. They are said in year 2050 40% of such income is to be paid as income tax. We can go back to the calculator. Remember the amount 42,000. 40, clear everything. When we take 42,000 40%, see this is the 40% of 42,000, 16,800. Going back to the question, see we have take the income tax as 60,800. Just remember we have found the income till that. From this income we are deducting what? Income tax. For calculating what is the amount of income tax, we just took that income 42,000 into percentage given in the question 14/100. We will get the answer 16,800. Similarly, it was given in the year 2016. Okay, in the year 2016 the percentage of income tax was given as 50%. Everybody know that 50% means half. So you needn't calculate anything. Just take the half of this as income tax and the other half will be the net income. That means we calculated the income tax. After calculating income tax, deduct income tax from this amount. We will get our net income. Hope the process of calculating net income is clear. If you find it difficult, please watch it from the beginning once again. If you have doubt, please don't forget to comment your doubts. I will clear it personally. Now we can move to the third step. Remember, the first step was to draw the format accordingly. Second step was to find net income by taking the amounts given in the question. Now we are going to do the third step. See, we have two more columns empty, right? We have to fill these columns. How to fill these columns? Let's see. That is the third step. We are going to find the change. I have given you how to find the change. Change means old year's value minus new year's value. See, for the first year, sorry, there's a mistake in this. It is not old year's value minus new year's value. Just take the difference. Okay, the new year's value will be taken first. Okay, please note that new year's value will be taken first. Don't worry, just with a common sense we can just know that. We need to know change means we have to know what increase or decrease have happened in the new year. Okay, so the formula is wrong here. The formula is change is equal to what? New year's value minus old year's value. Now let's see how we have find the change. The first thing is, see, in 2060 it was first item is net sale. In 2060 we have 1,80,000 rupees as what? Our net sales. But see what happened in 2050. It's 1,50,000 only. So we saw an increase. Just see, it was 1,50,000. It is 1,80,000. We saw an increase, and this increase is a positive increase of 30,000 rupees. How we found the increase? Just I have told before. What is the new year's value? 1,80,000 minus 1,50,000. You will get the answer 30,000. Hope that's clear to you. That is what we call the change. Similarly, we can find change for everything. The cost of goods sold in 2050 was 70,000, but in 2060 it became 80,000. That means what? There was an increase of 10,000. The next, we will see how far the gross profit has increased, how the selling expense, everything goes same. But see here, administrative expense, it was 25,000 in 2015. And what happened in 2016? It's just 20,000. So what does that mean? See here, there has happened a decrease. Remember, there was a decrease in the amount in 2015. The administrative expense for 25,000. What happened in 2016? It is just 20,000 rupees. So there happened a decrease. When a decrease happened, when you write the change, please put it in a bracket. See, we are not stating whether it increased or decreased here. We are just mentioning the change. So we have to know that there happened a decrease. It is a change. If it increased also, decreased also, it is a change. There is no doubt in that. But we need to know whether it increased upward or decreased downward. How the change happened. To know that, we can do one thing. We can put it in the bracket if it is an increase. So we can easily recognize that all these things have increased and this particular thing have decreased. This also has decreased. Similarly, we can identify. So what we are doing, please remember, we are taking the value of 2060, deducting it from 2050, put the amount here, and if it is negative, put it in a bracket. We do the same till the end. Okay. So we saw everything. There were just negative changes. See, only these two things have decreased, everything else have increased. That's what we found here. This is the third step of preparing a comparative income statement. By doing this itself, you have almost done what you need to answer the question. But if you want to make it correct, if you want to make it complete, you have to do one more thing, that is fill the fourth column, change in percentage. So we are going to do the last step, what is find the percentage of change in value. Okay, how to find? This is the formula. Change in percentage is equal to change by old year's value into 100. We have found the change, we have the old year value, we have to just calculate. I will show you an example. In net sale, what change happened? Net sale, we saw an increase of 30,000 rupees. From where? From 1,50,000 rupees, we saw an increase of 30,000 rupees. So in 2060, what was the change? What was the percentage of change happened? This is how we calculate. Please look here. 30,000, that is the change. See the formula also. Change divided by 1,50,000, that is the old year's value, into 100. We can do the same in a calculator. 30,000 divided by 1,50,000 into 100. We get 20, that is 20%. That means what? In net sale, we had an increase of 20%. Similarly, when we do that for cost of goods sold, that is 10,000 divided by 70,000 into 100, we get 40.29%. When we look gross income 25%, selling price 50%, and remember here it was not an increase. When we consider the administrative expense, it was not an increase, we had a decrease here. Okay, here 25,000 was there in 2050, it decreased to 20,000, 5,000 decrease happened here. That's why we have put the change in a bracket. Similarly, we have to put the change in percentage also in a bracket. Hope that is clear to you, or else everything goes the same. No other additional adjustments. Like that, when we prepare, see, this is the final answer. Remember, you need to draw just one table. I am repeating it because I have given 4 different tables and 4 different steps. Because why? You need to understand. When you answer, you just draw it in a single table. What you have to do? First, draw this format, find the net income, fill change, and from that change in percentage. Easy to calculate. Okay. Now, the final part, we are going to end this section. Before ending, we just need to know why we have prepared this. From the part of a business, they need to know many things, not just the change in net income. When they see the change in net income, we can see, yes, there happened a change of 25%. There happened an increase of 25% in net sales when we compare the net sale of 2050 and 2060. See, we need to know more in detail. We need to know what all contributed to this change. I will tell you how a financial analyst will interpret this to a business. This is something higher end part, but if you can understand, that's a very good thing, because tomorrow you are going to be a part of a business in a way or another. So just listen. This is how they would interpret. When they saw here, yeah, we got an increase of 25% in net income. Now we can see how we can relate it to other things. See, when the gross profit increased 25%, the net income also increased 25%. So we can interpret that, we can make a conclusion that increase in gross income in the current market situation will give similar income or similar increase in where the net income. We found that from this calculation also. See here, everything else increased except administrative expense and interest. So we can also conclude that if we keep increasing everything else but we reduce our administrative expense and interest expenses as per the current market situation, we can expect an increase of 25% in net income. Similarly, see here, we have made a huge increase in the selling expense. See, we have paid we have paid 50% of what we did in 2050. See, we just spent 10,000 for our selling expense in 2015, and what we spent in 2060, 15,000. That means half more we have added to it, but that have not made any sort of losses in our net income, that have just increased our net income. So from that, what we can understand, by increasing our selling expense, see, selling expense increase means what? We are contributing or motivating more sales, right? We are advertising, we are giving it to salesman or something like that. Somehow we made a selling expense, means we put our amount in what? To boost our sales. Whatever we have done, we have paid that amount to boost our sales. So increasing the amount we spend to boost our sales, we have made increase in net income also. Similarly, every business will have different things to look upon, and they will compare that things and bring some conclusion from this statement. So that is the practical use of this statement. Hope everybody have understood how to prepare a comparative income statement. If not, please let me know how can I help you. Thank you for all.